And it's 1 p.m. That means it's time to go around the world of business here on Business Incorporated. Here's what we have for you on the program today. In Zimbabwe, inflation is up again for the month of January. Banks may be in trouble in South Africa as there's allegation of manipulation of the rand. And as Data Protection Week comes to an end, we share some tips on how you can protect your data. Good afternoon, welcome to Business Incorporated. It's an hour, 55 minutes more realistically, of going around the world of business. Starting right here, I'm Ini John Mekwa. We start from the global space that prices dipped on Monday as China's ailing property sector took another hit, while a drone attack on U.S. forces in Jordan added to supply disruption concerns in the Middle East, and Houthi militants stepped up attacks on vessels in the Red Sea. Brent crude futures was up 0.29% at $83.78 a barrel, while U.S. West Texas Intermediate crude was also up 0.23%, price $78.23. A Hong Kong court on Monday ordered the liquidation of property giants China's Evergrande Group opens a new tab in a sign of deepening crisis in China's real estate sector, knocking sentiment on crude demand in the world's largest oil importer. Meanwhile, back here in Nigeria, Shell's exit from the country's onshore oil sector highlights risks of oil majors face in Africa's biggest exporter, but has raised hopes that local firms could reverse the output decline from the Niger Delta, according to industry officials. They also say that Shell, which pioneered Nigeria's oil industry, is the most prominent Western company to exit the Delta, a region blighted by pollution, oil theft, pipeline vandalism. And those issues have for years stymied investment and throttled production and government finances. The company's sale of its subsidiary to 5 mostly local firms fits an ongoing trend of Western energy companies divesting onshore Nigerian oil fields. ExxonMobil opens a new tab, and Italy's also. Well, from there, we can tell you that Chicago soybean futures edged higher on Monday, but remained close to multi-year lows after rains in key suppliers, Brazil and Argentina, suggested that supply will remain plentiful. Corn and wheat prices fell, with both markets being well supplied. The most active soybean contract on the Chicago Board of Trade was 0.1% at $12.10 a bushel, after dipping to a 2-week low of $12.07 earlier in the day. CBOT corn, which was down 0.2% at $4.45 for half a bushel, also followed suit. Back at Nigeria, still doing with grain. A ship from Ukrainian grain, which departed from the port of Samsun within the framework of the Grain from Ukraine program, has arrived in Nigeria. The dry cargo ship Fort Senging arrived at the Port Harcourt on January the 22nd and has already started unloading. Ambassador Extraordinary and Plenipotentiary of Ukraine to Turkey disclosed this information. The ship left for Nigeria on December the 30th. Grain was stored in warehouses in Turkey within the framework of the UN World Food Programme. It was sent to Africa under the Grain from Ukraine program from the Turkish ports of Samsun. In Lagos, 1 week after the Lekki port, which is Nigeria's deepest seaport, received the largest container ship to call in Nigerian port, the new port is set to welcome another container ship that's bigger than the Maersk ship and is expected today. The vessel, named CMA CGM Scandola, has a capacity of 14,020-foot equivalent units of containerized imports and is scheduled to arrive at Lekki ports today, Monday, January the 29th, 2023. The ship is an LNG-powered vessel in line with the global sustainability agenda. We hope to see more activities, around the Lekki port and even in Port Harcourt. Now let's go to our first conversation for today, Monday, and we're looking at the payment ecosystem in Nigeria. We've seen growth in digital banking and the competition it gives to traditional banking, but there are benefits if both the digital and the traditional banking system would collaborate, at least for the small businesses in Nigeria. Let's delve into that and some probably challenges already being faced by both and the users with Uzoma Dozie. He's the Chief Executive Officer and founder of Sparkle Nigeria, and he's also the former Group Managing Director of Diamond Bank Nigeria. Mr. Dozie, good afternoon. Thank you so much for your time. I think you should unmute, Mr. Dozie, because I cannot hear you. All right, we hope to get Mr. Dozie very soon. And we know that when we talk about the digital banking space, we've seen some development. In fact, one of those apps recently has decided to connect to ensure that all its customers have their BVNs and their names connected. And some people ask the question that if we are looking to enlarge or to expand our financial inclusion space, then making more demands of customers, especially those in the rural areas, might actually be a challenge. But I think we have Mr. Dozie back now. Good afternoon to you. Can you hear me?
Good afternoon, I can hear you. Can you hear me?
Yes, I can hear you now. Great. So, Mr. Dozie, let's look at our payments ecosystem in Nigeria. Now we have major players, digital banks and the traditional banks. What impact would you say that, especially the progress or the growth of the digital banks, what impact do they have on our retail sector? Are we feeling any impact? Or are things as they used to be?
Thank you for the question. So definitely, there's definitely impact. And there's impact not just from the digital bank, but traditional banks, because you are seeing some collaboration with traditional banks and fintechs, and you're seeing digital banks or fintechs that are focused on last mile solutions for the consumers. So, and just to give you a simple example, when I was at Diamond Bank, we worked with fintechs to actually come up with last mile solutions that were more cost effective than if we used the traditional technology infrastructure that we had for corporate or our typical SME banks. And you can see that there has been impact because just this solution has reduced the cost of transactions. So now where you used to see big ticket transactions, you are seeing a lot of small ticket transactions by retail customers and individuals, because the cost of sending 1,000 naira to somebody or even 500 naira has reduced drastically from about 5-10 years ago, and that's because of technology being used. And traditional banks have no choice but to also start adopting these solutions if they are going to especially drive financial inclusion. And the two in the COVID lockdown, the cash disruption that we experienced last year also drove the point that we have to also go digital, especially when you see these physical disruptions in our ecosystem.
So it sounds like it's more of a competition relationship, because the traditional banks now have to, for instance, reduce their cost of services, because they do know that if we do not, then customers have another place to go. Is there a need, or what are some of the benefits if they collaborate? What are the areas that they could collaborate for the good of the customers?
I mean, they're already doing so. So, like, if you look at, and don't forget, the digital banks like Sparkle that are competing, but we also collaborate in some areas, especially when it comes to shared infrastructure, security, payment system. We all participate in NIBS at the moment, which is the payment infrastructure gateway for Nigeria, which is actually one of the most successful, should I say, technology platforms in the world. Now, and when it comes to digital payments, Nigeria ranks at, I think, 6th in terms of volume that it drives through. So we have actually been quite successful. But there are other areas like lending, like e-commerce, like even choice of types of services that it's difficult for traditional banks to provide because of the way their systems were set up, because of the type of systems that they currently have. Digital banks like Sparkle, for example, we build solutions around what customers are already doing. So we don't say, okay, this is how you should bank with us. It is like, oh, I see this is how you're doing, this is how you're living your life. Let me build a digital solution around that so that, you can have a better experience, you can do things more cost effectively, and you can actually do so much more. So it's using technology to help people do more beyond the traditional, debits and credits and savings. So, and I think there's a distinction between fintechs and banks, right? So fintechs are good at facilitating payments, but banks will always be good at helping people store value and save their money. And I think that's where we need to also make clarifications that in this industry, there are people who facilitate transactions and there are people who help people save and pay their money. And so we will compete with traditional banks on store of value, but we have an edge when it comes to, how to help people facilitate transactions, because we're using state-of-the-art. We're built on the cloud. We're built digital. We're built to address the new generation of people, unlike traditional banks that have not only legacy systems, but the culture of banking is completely different from the culture of banking that the new generation actually want today.
These days when cash seems to be expensive, we know that the POS operators, for instance, they've increased their charges, and it just looks like Nigerians have to pay for cash, buy Naira with Naira. Perhaps more Nigerians will turn to cashless transactions, and I guess that's one of the areas where these digital banks, as you said, they help facilitate payments, small-scale payment, for instance. Looking forward to a day when we can go into the open market and you don't need to have cash, you just need to have your card or do your transfers. Do you see those days close in the future in Nigeria?
So we will see a shift from cash to cashless ways. I don't think it will be very, very fast. And there are many reasons. Cash is still prevalent in most parts of the world, especially in parts of the world where they have advanced digital systems. I would say the only places where you have exceptional reduction in cash is the Nordic countries like Sweden and Norway. But in Nigeria, the problem that we have is the infrastructure and also the digital liquidity. If I wanted to pay someone in the village, in a rural area, digitally, you have to now make sure that systems are up, they actually understand, they have a device, they can afford the devices. So we're a long way away from that. So I always tell people, Lagos is probably one of the only places, especially on the island, where I can actually walk around, I can actually just leave my house and spend the day with just my mobile phone and make payments quite easily. It's difficult to do that in other parts of Nigeria, and only a few cities in the world in which you can do that. So Lagos is some areas of Lagos just is a glimpse into what the future can be if we have the infrastructure, the affordability, the education, and also the digital leadership to actually drive that liquidity. But it will happen, but it will not happen tomorrow, and probably won't happen in the next 10 years. But what you will see is a big shift, especially as the younger generations come up and they become the drivers of the economy and decision makers, because this is the era in which they were born.
So what would that shift mean to businesses, especially small businesses in this case?
I think it's wonderful today. You see, what has happened today? I mean, if you think about setting up a small business 20 years ago, I mean, you would have to go and find a physical shop. You need to hire people. You will need to set up systems, buy equipment. Today, people are setting up their businesses without actually leaving their house. I mean, Sparkle today, we help people with your mobile phone. We'll help you even get incorporated, open your bank account, set up your inventory, your invoicing without actually stepping out of your place. And so what that has done has reduced the cost of starting a business and also reduced the cost of running one and also allow you to do your business wherever you are. And so technology is actually helping businesses grow sustainably, but it's also increasing competition because when technology is helping reduce the barrier to entry. Unlike before, where you had to go and find a place to rent, but now you don't need that. So there are many things that have just been removed, barriers that have been removed, that will now mean that there will be increased competition, which is good for the consumer in the end.
Yeah, well, and obviously more players will also get into the space, the easier it becomes.
We see that Nigeria already have 40 million small businesses and growing. What we need now are 40 million sustainable businesses. Then you will see, because small businesses are the drivers of growth in any economy, the biggest employers of labor, biggest contributors to GDP. We need to help galvanize those small businesses. And technology is helping that, but we also now need legislation and also some regulation to help facilitate that.
Yeah, so back to that conversation on ease of doing business, which falls on the government's table again. Well, thank you so much, Mr. Uzoma Dozie, the Chief Executive Officer and founder of Sparkle Nigeria, also former Group Managing Director of Diamond Bank Nigeria. Thank you for your time. Enjoy the rest of your day.
Thank you, too.
All right, let's take a break now. When we come back, we'll head to the markets. We have a whole lot waiting for you right here on Business Incorporated. Welcome back. Just before we head to the market, let's head to South Africa, where there's trouble brewing in the banking sector there because several global banks are now at risk of prosecution in the country over allegations of manipulating the rand during the international forex trading scandal. And this scandal has already resulted in substantial fines imposed on the banking industry worldwide by regulators. South Africa's Competition Commission announced its recommendation to prosecute a total of 17 banks. And the investigation into rand manipulation was initiated in April 2015. We have our correspondent, Innocent Semosa, gathered the pieces of this story and what to expect in the nearest future.
In what's shaping up to be a major legal upheaval, several global banks face the prospects of prosecution in South Africa over allegations of manipulating the rand. While some political party leaders are calling for strict punishment to rand manipulation implicated banks.
Look, I think from our perspective, firstly, we are seriously disgusted by the conduct of the financial institutions that acted in a very unpatriotic and greedy manner. Between the period which is alleged between 2007 and 2013, which we are not too sure of ourselves. However, that behavior is tantamount to economic treason, actually.
In practical terms, what it has done is that it has led to a lot of suffering. A lot of people had their cars repossessed. A lot of people had their houses repossessed. Simply because with the depreciation of the rand, the interest rates went up. And that's why they were making a lot of money out of it, but at whose expense? At the expense of the poor. The economy suffered a lot. The cost of living went up.
Standard Chartered has agreed to pay 42.7 million rand settlement for manipulating the rand exchange rate. Some say the money is simply not enough.
From what we have discovered so far in the research that we've done, we've discovered that they made trillions in profit from fixing the rand. And as a result of that, I believe that just 42 million is literally nothing, not even 1% of how much they made as a result of this negligent behavior.
Meanwhile, economists say this will not have a long-term effect on the South African economy.
Standard & Chartered paid money for the problem to go away. I don't think it should be seen as a fine. And it's also important to note that although there could have been some manipulation in the short term of the exchange rate of the rand, as an example, I don't think it will have a long-term effect on the South African economy. The market is just far too big to have one or two banks, or even a couple of banks, to permanently influence the exchange rate of a currency in one direction or the other. And if they could do that, that specific manipulation will have to be reversed in other directions soon. So the net effect on prices of the exchange rate, for example, is unlikely to have a significant impact on the financial markets or on the South African economy over time.
They approached us and asked us for assistance because we are in the foreign exchange market.
While the Competition Commission continues with its investigation, it also approached the South African Reserve Bank for assistance. From Johannesburg, South Africa, Innocent Samosa, Channel Television News.
Well, I guess that also points, some attention to the issue of round-tripping of the Naira back here in Nigeria. We've heard the story, former CBN Governor, Mr. Godwin Emefiele, did, allege that it was round-tripping. That's part of what they're investigating right there in South Africa. But unfortunately, in Nigeria, we haven't seen any situation where there's been an investigation or any bank, individual, or BDC, held accountable, or at least even face the courts, because of this. So we'll see how that story ends in South Africa. Now let's head to the markets with Anietie Edet. I learned at intraday, the NGX had hit another new high, 104 from 102. It closed with on Friday.
I think it's becoming more of I would say, cliche-ish because this is the fourth consecutive week that the Nigerian stock market is sustaining that bullish trend. It's good news, but I'm more of
they say the higher the rise or the bigger the fall or something like
exactly.
that. So I am scared, but I mean, let's stay optimistic.
Well, optimistic, caution at the same time.
This is more than caution, Anita. We started this year with 74,000.
Yeah,
now we have 104,000.
As
so
a
we
matter
have
of
about
fact,
30,000 points added just within a month.
And we've also broken past that number. As a matter of fact, even dusted the 100,000 level. We're now looking at the possibility of market even rising above 120, maybe a possible 150
first.
Within the Q2.
Let's not get ahead of ourselves. We'll do 110 and then we'll talk about 120.
Exactly. All right. So for our markets, intraday trading for markets around the African continent, that's where we're starting off first. And number one on that list is our own local stock market here, 104,825.81%. That's at intraday. We're looking at for how the market will close Monday, the final 3 days of January. But then we still have 2 more days. We have 5 days actually this week, but 3 more days for January to be over, and then we'll be looking at whether it's January to remember with the market at well over some 42, more than 28% rise. But then for the South African market, we saw a pullback there, 0.31%. Let's take a look at the EGX as well as the Kenyan stock market. They were also in the mix there. Egypt was up by almost 2% there. Kenya Stock Exchange also, it was in the red, 1.74%. So that's it for that market. But then still looking at Nigeria's financial market, we're starting with the FX side of things. But then we'll be talking to Caleb Alimi, the chief dealer at Providence Bank, to give us some details about the market, particularly when you're looking at the first bond auction after the Debt Management Office released the Q1 debt calendar, the bonds calendar, where you'll be talking more about the government's borrowings. But then before we talk about the government's borrowing, let's take a look at the forex market, which is one of the headaches for Nigeria's financial markets. Now, thank you for joining us, Caleb.
Thank you for having me, Anita. Good afternoon.
Okay, so first, I have 2 questions for you. First, like I mentioned, I said starting with the FX side of things. Forex, Nigeria is one of Nigeria's biggest headaches, is particularly when the CBN is trying to clear the backlog. Just a couple of minutes ago, we heard that the central bank has released $500 million to clear, across all the some sectors, manufacturing, aviation, and some other sectors. Now, for the FMDQ, we saw like a 20.21% week-on-week decline on the markets. Now, can you tell us more about why that decline happened?
The major problem we're facing in Nigeria is the supply problem. And, until that is thoroughly addressed, we will continue to have this, shrinking in the transaction volumes that you see on the FMDQ platform. Right. Speaking to that is largely a supply problem. Until supply improves, we're going to continue to have, limited and unlimited transactions happening on.
Okay, now, so that takes me to my second question, because I have just about 1 minute with you now. The Debt Management Office today has carried out, as we speak, the first bond market auction across, that's about 360 billion across three reopenings. That's the 16.29% FGN March 2027, the 14.55% FGN April 2029, and the 14.7 FGN June 2023, and the FGN 2038 bonds. Now, tell us what is happening. How is this market? How is this auction playing into the markets?
Just a bit of a spanner in the works or something to sort of set the tone for the auction is also a surprise factor that the CBN floated an home auction, just like about an hour or 2 hours ago, at the end of today. That would sort of set the tone for the bond auction. Typically, we know the CBN home auctions will come out around the 17% handle or thereabouts, and that would influence investors going into the bond auction. First of all, market has been tight. Interbank liquidity has been very tight over the last week. We started last week with minus 250 billion. We ended with about minus 50 billion. This week, FAC allocations came in on Friday. So this week it was expected to be more liquid. But giving the home auction to take out about 350 billion, they issued 350 billion in total across three maturities, 92 days, 182 days, and in 364 days. 350 billion, that would impact liquidity significantly going into the bond auction. And the bond auction is trying to raise 360 billion. So we expect that for them to raise close to 360 billion or over that, the rates would have to increase above where they stopped last year. The 2013 paper, which is the longest at this auction, closed last year around 16%. We expect that to close, to kick off the year around that same rate, maybe 16 or 16.5 as the auction closes. But we wait to see what happens at the auction. But we expect that to close around that 16% handle. And then largely influenced by the liquidity in the market and also the home auction today.
Okay, so in 60 seconds, we saw bearish sentiment for the fixed income market in general, because we're still within the financial market, the fixed income market, treasury bills and bond market. Last week it was bearish. So should we still expect a hangover, a spillover of this bearish sentiment that we saw last week? Are we going to see it in the final 3 days of January into the rest of the week this week?
Absolutely. It will continue, and it's largely dependent on the interbank liquidity that we have. That continues to shrink, and that will remain depressed for the rest of the month. So yes, very sentiment to continue into early February.
Okay, Caleb. So we'll look out for that expectation and then the outcome. And of course, like I'd always say, our eyes are always on the market. So that was Caleb Alimi, Chief Dealer at Providence Bank, giving us details about the fixed income market, which is on our spotlight. Now let's get back to the market, and this time within the Middle East, we see mostly negative sentiment there across the GCC stocks. But only the Dubai FM, which is for the United Arab Emirates, two of them are on the United Arab Emirates. But this is for the Abu Dhabi, which was in the red, 0.31%, and that's because of some profit taking, while this had some bargain hunting there across some of the stocks which are listed on that market. Let's move over to the other side of those markets. Saudi's stock market, which we know that this is the number one for the Arab world, the stock exchange, up by 0.07%, as you can see on your board, as well as the Qatar Stock Exchange Index, 1.89%. Moving over to the U.S. market, where we see the stock futures, they were trading, the stock futures were opened at mixed, And this because we're expecting more earnings to be released to the market, to the world's biggest financial market, the world's biggest economy. So now for the Dow Jones, it was in the red, as you can see on your board. For the S&P 500, just a blip there, 0.02%, and for the Nasdaq futures, where the tech giants were there, so it was up by about just almost about 1/4%. So tomorrow, the U.S. House of the U.S. Federal Reserves will be beginning their what they call they call it the FOMC meeting, but we call it the interest rate decision meeting, where all eyes will be on that, the two-day meeting of the U.S. Fed for Tuesday and Wednesday, where we'll see the outcome of that meeting. So we're all eyes on that. And then for last week, the three major averages were up in the green, and that's at the same time where the U.S. GDP came in much at a surprise at 3.3% last week. So let's move over to the Asian markets. We see most of the Asian markets were in the green. As you can see, the Nikkei, Japan's Nikkei 225 up 0.77%. Saudi Arabia, the South Korea's Kospi up 0.89%, while the Hong Kong's Hang Seng Index was up by 0.78%. But on the other side of the market, we see a little bit of pullback from China's stock market. That's the Shanghai Composite, which was in the red. And this is because one of the impact of this, the pullback that you see on the Shanghai index is because Evergrande, which is a property giant, has just been handed down a court directive that it should be liquidated. Let's not forget that Evergrande, which is a property giant in China, it has been facing some debt crisis, but now it's been asked to liquidate, and that impact has fallen on the Shanghai Composite at about 2,883.36%, down by almost 1%. So that impact is riveting across that market, and then we'll be seeing how it turns out in the days to come. Now for the Australia Stock Exchange, the ASX 200, up by 0.30%. So we're seeing, for this week, we're expecting that Taiwan and Hong Kong, they will be releasing their fourth quarter GDP data. So all eyes will be on that across the Asian region. But for the markets in general, all the markets will be eyeing out for the U.S. stock markets, for the U.S. Federal Reserve's meeting, the first for this year, INI. So expectation is that they would hold rates steady.
Yeah, well, our expectation is different from that. And the Evergrande story, is also one that's moving and bringing back fears. We thought we're over this. We had the shift, I think, about 6 months ago, and then we thought it was settled, the real estate sector. And because we know that once it starts happening like this, then we see it spill over to, because, the market is global now.
The real estate, yeah.
Yeah, we see the effects. Once it goes to the United States, then it starts, coming to the developing countries, and we all bear the brunt. So we hope with this liquidation, there'll be kind of certainty and stability
of course, it has already riveted China's market. China's property market has really dented the country's economy. But the government is still very optimistic about a rebound. China, of course, is the world's second biggest economy. So all eyes will be out on how that plays out for the properties market, real estate to be precise. All
right, thank you so much, Anita.
Pleasure.
Well, talking about the property market in London, there's the latest London housing report, and Juliana joins us now to give us the details and how it would affect her. I hope you're not negatively affected, Juliana. Good afternoon.
Good afternoon, Ini. Yeah, we have had some data from Zoopla, actually, which is a pretty popular online marketing tool for home buyers. And they've said that finally, 4 weeks into the new year, that the housing market is seeing some sort of resurgence. And London, the British capital, is leading that, which is quite surprising because we know that, goodness, it is incredibly expensive to live in the British capital. In fact, I think, if you look at data today, it costs about £500,000 to live in the capital for an average home. I don't know what rate that is in Nigeria, but that's at least £500 million naira. Incredibly expensive, which is one of the reasons why it's been stagnant in terms of the property market in the capital over the past 8 years. In fact, if you compare property growth in the UK in terms of house prices in comparison to the rest of the UK, you're looking at about 13% in London to about 36% in other parts of the country, and that is obviously for most reasons. It's just incredibly expensive to live here. In fact, I think if you wanted to purchase a property in London, you've got to try and find a deposit that's 13 times the size of an annual salary in the UK. So that has dented it. But over the past few months, there have been some movement in the housing market, which has led to more prospective buyers taking an interest in perhaps purchasing a property in the British capital. One of them is mortgage rates. There's been so much competition amongst lenders trying to put down mortgage rates. At one point, they were at about 6% due to the after effects of trustonomics, but they've since fallen down. I think you can get mortgage rates of between 4 and 5%, and that's a good thing. Also, as well, COVID. Yes, during the pandemic, we had a lot of people moving out of the capital because they wanted a bigger space if they were going to be working from home. But we are slowly starting to see people come back to the capital, and that's cheered investors within the sector.
And it's going to be kind of busy for the Bank of England this week. You want to share the expectations?
Yeah, it is a busy week in the capital. I suppose it's probably best starting with the big story of the day out of the UK, which is the fact that the UK Prime Minister Rishi Sunak has announced an outright ban on disposable vapes. This is a huge story, of course, because we know that the e-cigarette market in the United Kingdom is worth about £1 billion every year. In fact, since Rishi Sunak, the Prime Minister, made that announcement, I think it was first announced last night, but this morning, share prices of a lot of these retailers that sell e-cigarettes or disposable vapes, they've dipped. I believe about £1 million has been wiped off their market value. Lots of outrage, as to be expected in the UK, because they don't like to be a nanny state. A nanny state meaning the government dictating what you eat and what you do with your health. But Rishi Sunak, who's looking at legacy now, because if we look at polls, he's going to be out as Prime Minister very soon. He wants to leave a legacy so that most children born in the UK after 2009 will never be able to purchase a cigarette or a disposable vape, which are colourful and fruity, which is why they've been attractive. So that's a big story worth mentioning. And as you said quite rightly, on Friday, it is the MPC meeting in Threadneedle Street, where the Bank of England are going to finalise on interest rates, currently at a 15-year high of 5.25%. Quite interestingly, during the last MPC gathering, 3 of the Deputy Bank of England governors voted against maintaining interest rates at 5.25%. They wanted to go lower. The mood music at the moment is it is time to lower interest rates, but we didn't see a move from Lagarde last week at the ECB. So perhaps I think the markets are right to price in that markets will maintain, or the Bank of England will maintain the 5.25% rate at this time.
Yeah, well, I wish we could say that about Nigeria. We're somewhere close to lowering interest rate, but we're so far away from that, Juliana. But you mentioned the market. Let's see how that's doing at intraday.
Not bad at intraday, mixed bag. The all share is up 0.02%. The FTSE 100, the UK blue chip index, that's up by 0.18%. But the FTSE 250, the domestic market, is down by 0.54%, mostly due to that announcement of an outright ban in Britain of disposable vapes, not expected to come in until towards the end of the year. In the currencies market, the British pound is currently trading up against the US dollar by 0.01%, up 2 against the euro by 0.24%, but the British pound is trading down against the Japanese yen by 0.25% at intraday.
Thank you so much, Julian. And I must tell you, it's a season of ban for government, because back here, styrofoam has been banned in Lagos and now in Abia State. So I think the government, they have a meeting and it's time to ban things.
Goodness. Yes.
All right. So governments, yeah, Juliana. So I think governments everywhere are the same. I mean, they want to protect health, and so, somebody has to wield the big stick. Now let's head to Berlin, where the United States President Joe Biden has said that his country will not build any new LNG, liquefied natural gas terminals, making life a whole lot more difficult for some importers of liquid natural gas. And we know that Europe is part of that, especially Germany, the giant economy in that bloc. Well, Lars Holter joins us now from Berlin. Lars, good afternoon. First of all, what's the situation in the US, and how do you expect this to affect you in Germany?
Thanks for having me, Ini. So yes, President Biden says there will be no more new terminals being built, and that is quite a policy change. Over the past few years, the U.S. has dramatically increased its production of shale gas and transformed it into liquid natural gas for export. There are currently 7 terminals active, and at least 4 more had been planned. Those are the ones now that won't be built after all, and there's pretty much 2 reasons for that. The first one is clearly that Biden says we need to protect the environment and fight climate change. Despite shale gas production having a much lower carbon dioxide output than, for example, coal, it is still a fossil energy source and does obviously have quite a footprint. And too much so for Biden. Add to that the political background. We're in the midst of a campaign in the US, and Biden clearly wants to distance himself from Donald Trump, who went all in on natural gas, obviously being a lot more interested in corporate interests than the climate policy.
So how do we expect this to really affect Germany?
Well, Germany has to make sure it gets all the energy it needs in the long run, especially given the fact that Germany's economic strength relies on some very energy-intense businesses, including steel production. Also, lots of gas is needed in the chemical industry and elsewhere, not to mention heating homes and other uses. And so obviously the government will keep a close eye on who can still reliably deliver and how much can be put in storage. For now, however, there is no immediate need to act, with the US basically canceling the construction of new terminals. We're talking about what could have been exported sometime in the future, likely years down the road, whereas current supplies aren't really affected.
What about the markets? Are investors reacting to this?
At China, where real estate giant Evergrande will be liquidated. That is the decision of a court in Hong Kong, and it has major implications on the economy there. The real estate and development sector was an engine to China's growth. We've seen a double-digit growth there for years, and now it's down to just about 5% last year. The stock market is at a 5-year low. The Chinese economy generally has weakened, and that could obviously now have effects on the world economy in general, even with the current de-risking strategy that we're seeing, where many countries in the West are trying to grow less dependent on China. We do have to accept, of course, the fact that many here, countries as well as companies, still depend a lot on China, some for supplies, some see the country as a market, of course.
All right, Lars, thank you so much. I know that Evergrande will be in the news for a couple of days, at least, before the dust will settle. Now let's move to Africa. Zimbabwe is where we're starting off with. Inflation in that country has surged as the currency rot pushed up the prices of goods and services, adding to pressure on the central bank to act. Well, consumer prices rose an annual rate of 34.8% in January from 26.5. Imagine the jump from 34.8, 26 to 34, according to data released by the Zimbabwe National Statistics Agency. And then prices advanced 6.6% in the month, compared with 4.7% in December. Major drivers of inflation were food and services, including housing, electricity, according to the Statistics Agency. The economy of Zimbabwe is a tertiary sector-based economy, making up 56.64% of total GDP as of 2021. And Zimbabwe has $44 billion informal economy in PPP terms, which translates to 64.1% of the total economy. Agriculture and mining largely contribute to export. The economy is set to reach $66 billion by the end of 2023, 88% increase in the forecast from $35 billion previously. And now we head to the crypto space. Now Ladi is standing by, and I think it comes with a little bit of good news, just a little bit, yeah, because I think Bitcoin did recover a bit, but we have our expectations very high. Ladi, tell you and your crypto guys, what did they say? What did they say this year?
At the end of the day, we've seen this market rally. You can't say the same for, the NGX. It just keeps going up and up and up.
I think that's scary.
This is a healthy correction we're seeing here.
No, this is taking too long, Ladi. It's been 2 weeks.
It's been 2 weeks. Yes. That's the problem. We have too many Oliver Twist investors, in this market.
We're in the market to make money. We're not in the market to look at the numbers.
I don't want occasional pullbacks here and there.
No, we don't like that.
Anyway, let's see if the NGX continues like that. But, you were talking to Juliana about rate cuts, that Nigeria
Bank of England meeting on Friday.
Still far off for us.
We're very far away. We're like Zimbabwe.
I was looking at Ghana here, and I'm seeing that they're actually cutting rates.
Yes, they are. South Africa is cutting rates.
By 1%, and I'm saying, that's incredible. Our neighbor here is already cutting rates. Inflation is already
don't worry,
heading downwards.
It'll spill
over. So hopefully it'll spill over into Nigeria.
Yeah, but what I always say,
but they did have to work hard to get
exactly. You don't just sit down and talk, fold your hands, and think, because it's happening in Ghana, it will come to Nigeria. If you don't take the right steps, customized steps, intentional steps.
For Nigeria.
For Nigeria, exactly.
And we count down to the February meeting, the first one.
We're here.
MPC. Let's see what happens.
We're here. God will keep us alive.
Exactly. All right, so there you have it. It's a green market. Yeah, it's been in the red for a couple of days now, but we're seeing some, bounces in the market. We're seeing Bitcoin there, $42,355. Ethereum also holding up above $2,000. BNB, $308. So it's green on the screen at this point, just little pockets of red. Let's look at the top cryptocurrencies we track now. Let's start with the headlines first. We see Peter Schiff there. He's a renowned economist and a major critic, of Bitcoin. But don't let this headline fool you, saying that Bitcoin could hit $10 million. He's actually making fun of crypto investors at this point. He's saying that the only way this can happen is if hyperinflation hits the U.S. economy and the dollar, and we don't see that happening. Other headlines now, we see the first FOMC meeting of 2024. That's, I think, tomorrow. So definitely investors will be bracing for what's going to be said, at the meeting. It's not what's done, but what's going to be said. Forward guidance, that's what investors will be looking out for. Then we also see ETFs. Is ETF still there now? But investors are expecting the halving, the Bitcoin halving, where what miners actually gain from mining Bitcoin, when that is actually halved. So that always has an impact on the price. Let's talk to Rume Ofi now, financial market analyst. Hello, Rume. Great to have you.
Good morning, Ladi. Good morning. Yeah. Happy Monday to you.
Good afternoon. So, Rume, at this point, we did hear from the CBN saying that banks can still carry out, crypto transactions, for virtual asset providers. We got that news, back then. But talk to me about licensing, because we know some crypto exchanges, they want to come into Nigeria and do business. But talk to me about how the hurdles they have to climb to get licensed.
Yeah, thank you very much, Ladi. A whole lot of things are happening in the Nigerian space. CBN gave a guideline, virtual asset service provider guidelines, to follow, so that we have some level of clarity in the industry here in Nigeria, which is a very welcome idea. But I think where the CBN didn't do much is it is not all inclusive. The players of this industry are not included in all of this. Putting side by side the fact that they categorize all cryptocurrencies to be spearheaded by the Security and Exchange Commission, which suggests that all of these assets are securities, which is not correct. Also, the aspect of guidelines on licensing, where all of the big boys obviously will be able to pay such amount of money, 500 billion thereabouts. It is not favorable for indigenous platforms. So it's more or less looking like a situation where we will have the foreign guys come into our country and head the industry. It's more or less like saying we are not happy about the banking sector that is predominantly spearheaded by indigenous banks here in Nigeria. So we need to replicate that. And also, in order to get some of these things really clear, our National Assembly needs to sit up. Like, for example, in the US, thereabout now, it is said earlier today that about 18 senators are pro-crypto. They are putting bees out there, like the likes of Senator Lumos and the others in the Congress there. We need to start implementing that in this part of the world so that we don't copy and paste. It doesn't make sense because this is another climate. This is Africa. We need to put regulations that best suits our country, Nigeria.
Right. So at this point, would you say, investors in Nigeria can still, anticipate some of these exchanges, operating, in Nigeria, for Nigerians? And do you see, all those restrictions, being lifted? Because some accounts were actually affected, back when the CBN actually put the restrictions on cryptocurrency transactions.
Yeah, so all of these are going to take full effect now that the CBN has, unfortunately, we're in the country where CBN is looking like a law-making body. All of these are going to go away. Some informations are going on, not confirmed yet, that some essence platforms are already applying for licensing. But again, if we don't imbibe that culture of charity begins from home, even from the implementation of the guidelines to put forward guys beauty, because we have these young people doing all of these things. We have the technical skill to put all of these things together. I believe if all of these things are done, at the end of the day, we will see more people coming into the industry, taking advantage of the industry and making sure that all of the hurdles we had in the past, from blocking of our account or restriction of accounts, all of them will be a thing of the past. It's a new beginning. It's a new way of doing transactions, and I don't think Nigeria wants to afford to be at the last. We need to be the giant, and we need to lead in this innovative technology. We're already seeing a whole lot of emerging tech like AI, blockchain, and cryptocurrency being in front burner of the discussion of the World Economic Forum that just happened, Davos 2024. So we need to start working. The National Assembly needs to start senators need to start sponsoring bills. House of Rep members need to start talking so that we'll have a guideline that these three-letter agencies need to follow for us to have transparency in doing transactions right.
Right, and definitely hope, investors are protected, as all these laws, come up. But right now we're seeing a bounce to the market. First FOMC meeting of 2024. What are you expecting?
The market hates uncertainty, Ladi, I must tell you for a fact. FOMC is here. Inflation is not going. I don't know if some people still believe that the Fed is going to see a 2% inflation rate. I'm not believing in that. You are seeing the 10-year yield go up a bit. The DXY is getting stronger. It's not looking really strong, good for risky assets like cryptocurrency in the short term. But in the long term, we're going to see the Kumbaya movement where things are going to be green as usual.
Right, we'll definitely watch out for that. Thank you so much, Rumi Ofi, financial market analyst. Always great having your perspective.
Thank you, Ladi.
All right, let's, that's how the market is looking today. But, if you cast your mind back to, say, 2022 coming into 2023, it was all about rate hikes, risk-off sentiment. Everyone's going to sell off equities. But 2023, we saw equities all do well. Bitcoin did well. All of them did well. But for 2024, I'm wondering what's going to happen. Because now they're talking about rate cuts. Yeah. So is this still going to be risk-off or risk-on?
I think the U.S., the Fed, has said that we're not in a hurry to begin rate cuts. Right. So, manage your expectations. Manage expectations. Yeah, so, maybe Bank of England, because, even the U.S. got a good GDP, more than 3%. For Q3, but, I guess they're just being careful. We don't want to jump into rate cuts and then we have to start trying to rebuild it back because inflation is surging once again.
I guess we need to listen to what the apex bankers say.
Listen to what the Central Bank of Nigeria.
And the Central Bank of Nigeria.
All right, Ladi.
Thank you.
So that's it on the program. This very first working day of the week. Thank you so much for being a part of it. We're back again tomorrow at 1 p.m. Before then, please don't miss 10 a.m. We now have Business Morning on Sunrise Daily, so it's a huge package you have for that 9 to 11 package. Don't miss it. Laddie Williams will be there. I'll be back at 1 p.m. He'll be back at 10 p.m. So stay with the business team. I'm Nigerian.